Hello and welcome to another update video about DOT. Yeah, on the DOT chart, we can see boring sideways action, right? Like everywhere in the crypto sector. It's not really giving us a strong hint as to which count it prefers, and we just see sideways consolidation. I mean, the market itself seems very, very much undecided, as you can see there. So we have seen the price trend down lower over recent weeks. As per previous updates, it is entirely possible that this wave 2 has bottomed here on the 13th of April. Then the upside movement would be a so-called diagonal pattern as per the yellow scenario. We have a 1-2 and an AB, and we should now start a C wave to the upside. However, it looks really like a 5-wave decline, either to here, or if not to here, then to here. And in the yellow count, I mean, the yellow count basically needs a small miracle to still perform. And the bulls need to give us some evidence that they want to save the yellow count. What would be a good indication that the yellow scenario is unfolding, which would be the short-term bullish perspective? Well, the bulls would need to drive the price above $7.36. That is the micro resistance area. It's really the micro resistance area, and this micro resistance area is defined between $7.04 and $7.36, and it is the level or the range that needs to be broken to the upside in order to make the white count, which is the short-term bearish one, less likely. Why is that? Because in this move to the downside, let's assume in the white count, this wave 4 topped, and we're now moving down in a fifth wave, then this would be an A, B, C structure, and we typically would not want a B wave, or a B wave shouldn't really break above that resistance area, right? It would be a little bit too high for a B wave. And therefore, probabilities will start to shift if we see a rally above resistance. That would not confirm yet that the yellow count is successful, but it would be an indication. So for the bears to maintain or to gain control or to actually keep control, they need to bring the price lower while maintaining below resistance. And the next level that they need to attack is the red line there. This is the low point from the 19th of April. It's the $6.30 level. A break below $6.30 would be a good indication and actually confirmation that the white wave 5 to the downside is really unfolding. It already looks like that at the moment. What is a little bit unclear to me if the white count really is unfolding is, did we already see the A wave? Probably. Is this already all of wave B? Possible. And then the C wave down would drive it lower. For this scenario to remain valid, the Sunday high needs to maintain or stay intact. So it's at $6.94, and the bears need to stay below that level with the price, right? And if we take the price below the 19th of April low at $6.29, I mean, that would invalidate the yellow count. So as you can see, it's very balanced probabilities. It really is all about which levels need or which levels are breaking next, because we are holding below resistance but above the critical support line for the yellow count to basically remain valid. But yeah, as I said, a break below that last swing low here will formally invalidate the microstructure and invalidate the idea that a 1-2 setup completed here, because yeah, it would take the price too low. You know, in A B structure, the B wave cannot break below the beginning of the wave A. So the B wave cannot break below the beginning of the wave A. And that, I mean, technically maybe, yeah, it's not like a 1-2 setup. It's an AB, you know, that B waves can overshoot to the downside. I mean, how unusual would that be in a leading diagonal? It would, we would not entertain that idea really. It would most likely lead to a change in the wave count. So it seems like also with Bitcoin that white is in control. But to maintain control, yeah, resistance needs to stay intact. Now let's transition over to the downside targets. If another low forms, then we talk about $5.60 as the next main support level. It's the 61.8 retracement of the initial rally to the upside that formed last year or started last year and peaked here in March. So that is the $5.60 level, 61.8 retracement of the entire distance of that initial 5-wave move to the upside. Very common target for such a wave 2 correction, which obviously started in March. Below that level, we have the 61.8 extension of this decline. Okay, so it is actually the 61.8 extension of waves 1 and 3 taken together. That is one way of calculating a target for a fifth wave. And yeah, even below that level, we still have the $4.60 level if those levels cannot generate sufficient buy reactions. But I can tell you that below 460, I don't have anything clearly bullish left. So in summary, it's all about, okay, we're still in favor of a bullish outcome. The $4.60 level is really the line in the sand. Below that level, the bulls overall start to lose control completely. At the moment, we talk about short-term bullish and short-term bearish scenarios, but within an overall bullish thesis. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.